Okay, welcome to the Swing Trading with Cycles channel. Happy New Year. It is December 30th, 2022. This is the last trading day of the year, 2022. And so it's fitting. We'll think about what 2023 is going to look like. We're going to talk about the DXY today, the US Dollar Index. What is the outlook for 2023? I'll be very clear, and we haven't done an update on this in a little while because not much has changed. It's remained in the downtrend that it's been in since this big swing high on Wednesday, September 28th, right? And so it has made a long-term cycle high. That happened on this day. And we've been talking about how we're getting more and more evidence of that. I mean, look at after this high, we had this period, you can kind of call this consolidation and then this cascade lower, right? We're going to get into all the detail here. At this point, it's December 30th. So to be clear, it's about 2 p.m. So there's still a few more hours left in the trading day. Something crazy could happen, obviously, in the next 2 hours. But barring that, we're going to close at a really important level. We're going to close as a quarterly swing high. It is so important that you understand what that is. If you're new to this channel or you're not new to this channel and you still don't understand the concept, please take a look at the pinned tweet. I'm going to have two really important playlists in there. One playlist is 2 videos that go through Cycles Analysis 101. Important to understand that. It's a shorthand for understanding price action. Nothing mystical, no Fibonacci's, or none of that stuff. It's open, high, low, close. We're looking at price action. Higher highs, higher lows, lower highs, right? And then the other playlist is going to go deeper into swing highs and swing lows, which we talk about in every video here, but I want to make sure that you understand what that really is. A swing high is the way a downtrend begins. So when you see a swing high on a really high time frame, that means a downtrend has started on that really high important time frame. In this case, we're talking about the quarterly chart. So to be clear, we would expect lower lows and lower highs on the quarterly chart for the DXY, for the US Dollar Index. That means a bad 2023. And let's just be clear, that doesn't mean there aren't going to be any rallies, right? You remember I said lower highs, right? Those lower highs on the quarterly chart are going to be weekly cycle rallies. They're going to be, in some cases, we may rally for a couple of months straight, right? But it's going to be in the context, or it would be in the context of a longer term downtrend. Now, as with everything, if we break certain levels to the upside, then the analysis is invalidated. And we'll talk about exactly what those levels are. But this is the day that started it all. September 28th, 2022. We're now at December. So look at the path that we've taken since that day. Since that day, we've fallen, and we'll measure it from the low, not even from the high. From the low of that day, that's when the swing high was confirmed, right? We're down 8%. That's a lot for the US, for the world reserve currency to be down 8% in essentially 3 months, right? Because that's essentially one of the last days of September. So that's October, November, December, right? And there's a lot more downside likely because we're in a downtrend. It's not a prediction, that's an expectation. Downtrends lead to lower prices. That's just how it works until that downtrend ends. So let's talk about where we think we are in the cycle count. This is your daily chart. And so this thing has been so weak that it can't even make a daily cycle bounce. Now you could say that this was a daily cycle. I mean, maybe it was, right? On day 34. In that case, that means this thing rolled over on day 3, right? That's 104.93. That's 104.87, right? So we could use that as our base case here, right? So that means that this cycle, this is day 4, 5, 6, 7, 8, 9, 10, 11. So we're now on day 11 of a really left translated daily cycle. And again, you'll see or actually day 12. You'll see in the content, right? What does that mean? The left translation, right translation. There's a ton of content on cycles analysis. Again, take a look at the pinned tweet. I'll also include a link to a write-up if that's more your style, if you prefer to look at it that way. I think you have to spend some time with this stuff. It's going to change the way you think about investing, though. And again, it's not mystical. Cycles don't control anything. And I think that's a really important distinction people need to make. Price action is price action. The cycles just help us categorize it, right? So in this case, for instance, what we're saying here is there was a tiny little feeble 3-day rally. And since that 3-day rally, we've been making, this is more of a consolidation. We're now starting to move lower. So that's 12 days. This last cycle was 34. These things can vary pretty greatly, though. But if we're on day 12, you could see a world where we get like something like a 20 to 25 day cycle. Let's just use that as like you know, just an assumption, a little estimate, right? That would mean we get our low around mid-January, right? So you imagine we make a series of lower lows and lower highs from here, and we finally get our low in mid-January, right? Now, why that's important is that at some point we're gonna get a rally, as I talked about those lower highs, and it's funny, like you get that, like when you get the question on Twitter, for instance, like, do you think the US dollar cycle is going to rally? Yes, of course it is. Everything rallies eventually. That's how it works. Nothing can go down in a straight line or go up in a straight line. In a downtrend, you have lower highs. In an uptrend, you have higher lows, right? You're going to have pullbacks, counter trend rallies, as it were. So if we think about the weekly cycle, so the same way that we're having a trouble printing a daily cycle low, as you can imagine, we're seeing the same thing for the weekly cycle. So this was a potential weekly cycle low here on week 28. That clearly did not pan out. We're making new lows. So this is now week 30. And that's not unprecedented by any means. We've had cycles that were, this one was 33 weeks. And again, like there's nothing mystical or like, oh, well, the cycle has to be X number of weeks, or the way that I would think about it is, I think more about like how long can a rally last and how long can a decline last, right? Like think about that. This rally was 17 weeks. That's what this number means, right? So we rallied for 17 weeks, starting with this as week 1, and this is week 17. We then printed a swing high. Again, that all important concept of the swing high. That is what started the downtrend. You can see that on this weekly chart. As I talked about, swing high is how you start a downtrend. We make to simplify this, right? Lower low, lower high, lower low, lower high, lower low, lower high. Now you expect a lower low. So at some point, again, as I said, we're going to get a weekly cycle rally. We would expect it to be feeble, to be left translated, which means it would rally for less weeks than it goes up. But thinking about this, like this has been a 17-week rally. And if this is week 30, well, you can do that math, right? That means we've been declining for 13 weeks. So one thing to keep in mind is that this cycle would have to decline for at least 17 weeks for it to be left translated, right? Because we've already rallied for 17 weeks. And so in a left translated cycle, the decline lasts for longer than the rally. And so that is and again, there's no reason why price has to do anything. But it's good to kind of keep these little scenarios in mind. So let's just say that means we get a 35-week rally. And again, generally the decline is longer than the advance. So it doesn't mean it has to be like, 17 weeks and 17 weeks. It could be 20 weeks. And it doesn't mean we actually get there. But like if you're kind of scenario planning, that takes us, a 35-week cycle would take us to the end of January. Isn't that interesting? Because we just looked at a daily cycle scenario that took us into the middle of January. This is the multiple time frame analysis that we do on this channel. Again, if you're new, you think about how the different time frames affect each other. If we're trying to print a DCL, a daily cycle low, it's going to coincide with a weekly cycle low. That's how it works. I mean, generally, like important to understand, if you have a weekly cycle low, it's also going to be a daily cycle low. Not another way of saying that is, every weekly cycle low is also a daily cycle low, but not every daily cycle low is a weekly cycle low. I think that's a short way of thinking about it. But this is a great scenario, right? So this tells me maybe we actually have a longer DC daily cycle, like that scenario that we just talked about. Maybe that's actually, maybe we actually stretch out to like 30 days, something like that, right? And this daily cycle low becomes our weekly cycle low. And then we get a little rally, right? Again, we are going to get a rally. Norvas talks about this on Twitter. If you're on Twitter, you're following you're in that community that's following this. He talks about how we would expect a rally, right? A furious rally. He says to backtest this high. However you want to think about it, we're going to get a rally on the weekly level, right? So like you imagine, we get these, we do something like this, and then you'd expect something like that, right? But the expectation is that it would end with a lower high, right? And that lower high is, that's right, you guessed it, a swing high. So something like that, right? And we'll as we get closer, we'll kind of scenario plan. The other thing to keep in mind is that if this was our last weekly cycle low, right? So think about this cycle here at 20 weeks, relatively short weekly cycle, and also a really short decline, right? And again, you can quibble and say, well, this isn't a weekly cycle low. Who cares? If this isn't a weekly cycle low, what it definitely is a swing low, which means what? That's right, a new uptrend has started. Look, this was a tiny little downtrend. It only lasted 2 weeks following this swing high here on week 17. And then we started a new uptrend. And again, that uptrend has lasted for 17 weeks. And you could say, well, this kind of broke it. Well, sure, again. And then this swing low starts another. So you can kind of quibble about the timing. But again, the more important thing is understanding, are we in an uptrend or a downtrend, and how likely maybe that lasts. But the concept that you want to understand is how a cycle fails. A cycle fails when it goes below the low from a previous cycle. Does that sound familiar to you? That's just another way of saying it makes a lower low. Like, think about that. In order to go below a previous cycle's low, it means price is making a lower low. So again, all this cycle stuff is just a different way of understanding price action. I think it's useful. I think it's helpful, especially to the extent that you kind of have this shorthand. You can kind of make estimates, guesstimates at quantifying stuff. But what you have to remember is it's the price action that decides, not your like, oh, well, it has to end on day 30. No, it does not. It has to end with a swing low. That's what you're looking for. So you're looking for a swing low around day 30. But there's no reason why the swing low can't come on day 22. And the same thing goes for weeks, months, etc. Super important to understand. But this is an important, so that idea of cycle failure is super important, right? Because at this point, doesn't it look like, at this point, you would expect that this is going to fail. In fact, it must fail if we continue on a downtrend, right? Because price will continue to make lower lows and lower highs, and eventually it's going to take out this low. So to be clear, that level is 101.297. So that's going to be an important level to bookmark that. Add some. You can add some. You can add some alerts. That is going to be really important. Like, that would be around a level I would be inclined to take profits if I were short. And one could go short using UUP puts, which I have done in the past. Let's see. I don't love to short something that's like in the hole like this, that's moving so precipitously lower. But so to be super clear, the expectation, if this were to work out exactly the way a left translated failed weekly cycle would work out, which is what we would expect, since we think that we have made the 3-year cycle top, we would expect that we don't get our low until late January, and that low happens below this level, right? We're gonna have to see what price does. Do we actually make it all the way down here? Does this decline actually last all the way to the end of January? We're gonna have to see. But again, once that decline ends, right? Like, let's say here, we would expect a bounce, and maybe a bounce all the way up to like this pivot here. All right, like that's back to like the 107 area, right? I mean, that would be a furious rally, right? Like, imagine if we actually, like, you know, you could see a world where we easily kind of undercut this, right? Like we make it to 100 round psychological level, and then imagine we bounce all the way to 107. I mean, that would be a crazy rally, catch a lot of people off sides, only to make a lower low, and then make another lower high, and then make another lower low. So again, throughout 2023, we're gonna have these rallies, right? Theoretically, there will be opportunities to go short once you spot the swing high happening in real time, hit the hammer, puts on UUP. So that's our weekly cycle view. And finally, let's move on to our monthly chart and our quarterly charts. I don't want to make this video too long. So as we talked about, oh, right, just to be clear, that swing high on September 28th is what caused the swing high here on week 17, right? Which is what caused the swing high on this monthly chart in September. And I've been posting on Twitter about this for the last several months. Once we broke below this low, so we broke below that low in November, it was like, uh-oh, that's a big signal. And then what did we do? We broke below the low in December, we broke below the low of November. That's what a downtrend is, right? That's another way of saying a lower low, right? If we're going below the low. So again, you can see that 101 spot, like that, like 101 area that we talked about. That's a magnet right now on this monthly chart. I mean, I hope you can see that, the structure of this. Price aggregated here, and we could see, and in fact, you could see a world where this pivot here, like that area, right? Like that's 99.6, right? Like I see no reason why we don't fall below 100 before potentially before a bounce if we're declining into a weekly cycle low here. I mean, look at this thing. Now, that would obviously give a lot of room for assets that are correlated, inversely correlated to the dollar to kind of run. And this isn't really important. I talked about we're about to close the year. We have a quarterly swing high too. So these numbers don't count. They're from the monthly chart. So this is a quarterly chart. So this is all of Q3. Right, this big green candle. So look at this furious rally we've had, and I'll go back to the monthly chart for a second, really quickly. This was the start of our 3-year cycle. So it's the same way we talked about our daily cycle, we talked about our weekly cycle. This is an even longer cycle, one that's around 3 years, right? And again, ton of content in previous videos about this. Take a look. We rallied for 20 months, so September was month 20, and then we've started a decline, right? And so if this cycle is going to be, in the 30 to 36 month range, last cycle was 35 months, that means the decline is going to last like 15, 16 months, right? Because the rally lasted 20 months. And think about that. That's not even a left translated 3-year cycle, right? That's still right translated. It still would be quite painful. So that's the context that you want to think about. But I talk about how we have a daily swing high. We have that turned into a weekly swing high, turned into a monthly swing high. That also turned into a quarterly swing high. So this is your quarterly chart. This is all of Q3. The low for Q3, and I've been calling this out on Twitter, is 104.636. And where are we right now? A full dollar below that level. So we're on pace to close the quarter because the quarterly candle closes today, also the yearly candle. So we're on pace to close the quarter $1 below the swing high. That is pretty definitive. That's incredibly bearish. Again, there will be bounces, but the idea is this is just that monthly rally that we looked at. That was 20 months. This is the quarterly view, right? I mean, look at this thing. There's a lot of air to come out of this, right? And you could see a world where we take out all of this rally, right? That gets you down below 98, right? Like look at that big quarterly candle from Q2 of this year. So this has huge implications. This is incredibly exciting because we're talking about a trade that should work for all of 2023. And again, there will be rallies. There are always rallies. We're going to have to watch to see if they turn into lower highs. So that's our Dixie update. I'll continue to give sort of more micro updates, but just be aware of that bigger picture. And if we flip this to an annual chart to look at an even just bigger sort of time scale, this annual candle, you can see it didn't go red, right? Because we had such a furious rally. But you could see a world, so the low for this year was 94.629. You could look at this again. So these are yearly candles. So each candle is a whole year of price action. I would expect we're going to go below the low for this year, right? So it's not going to happen this year because we're closing the candle now, but we still breach that level. So that's 94.629. You could see that. You could see us getting at least below that level by the time this 3-year cycle decline is done. So that is our Dixie update. Really, really important developments here. It's going to be an exciting 2023 for those that understand what's happening, can analyze price action. So if you're new to this channel, definitely subscribe, if you found value here, and just looking forward to a very profitable 2023 using price action. Thanks for your time today.